Good morning, fellow listeners. Welcome back to Almus Market Mornings, your daily dose of financial update with your host, Shikhar Garg. The markets, as JK mentioned yesterday in his commentary, were a bit heavy and retracement were likely. And that's what we saw yesterday. There was a retreat in prices across. Well, as we saw this retreat coming in, New Zealand recorded a rise in inflation to its 32-year high. Now, that is something which validates the New Zealand Central Bank's decision to raise rates by 50 basis points. On the other hand, the real yields for US 10-year benchmark briefly went above zero, which is like it briefly went to positive territory, which can be a sign wherein the investors can stop looking for the ultra risky or very risky opportunities as they've been doing in the past couple of years. This was all about global, but on the domestic front as well, we are seeing some changes in the borrowing patterns. So, Pankaj, I'd like to know a bit more on these change in borrowing patterns while you also provide us some commentary on the financial markets. Please go ahead.
Sure. Thanks, Shikhar. What's happening is basically after the market rates have gone higher, like GSEC yields and OIS rates, now the banks have actually started raising their lending rate, basically known as the MCLR. So they have started taking up the marginal cost of lending rate higher, and all of them, most of them and all of them will do in coming days. The primary ones is like SBI, Bank of Baroda, Kotak, they have already raised it. Now, what will happen? This will definitely impact the finance cost across industries because whoever believe or whoever raised money in domestic market or abroad, the floating rates of all those have started going higher, and that will have an impact on profitability. Yes, it was a day of retreat in the forex, commodities, bond, in all market yesterday, as players tended to take profit on their positions ahead of key technical and psychological level. For US bond, it was yield near 3%, USD JPY at 130, and dollar index at 101. So everything has retreated from those levels. US equities continued to take cues from our corporate earnings. Now, yesterday Dow Jones was higher, but Nasdaq has entered into negative again, and it was basically influenced by a very poor performance of Netflix. Now, you can imagine the Netflix, which is the stock which has started and retreat back at the same level. So what I want to convey here is the pre-pandemic, whatever the market cap was Netflix, yesterday the same market cap was of Netflix. So entire pandemic effect of sitting at home and consuming goods or consuming services have completely taken a U-turn. Now there's a mixed view emerging on inflation. Some of the Fed members are saying that one of them actually has said that maybe we at the end of the year we will come back to 2% inflation target. Let's see how it happens. Federal Reserve also published the Bedge book yesterday, in which surveys showed that demand is very quite robust, and that's the reason manufacturers are able to pass higher cost to the consumers, and that led into a higher inflation. Yes, in line with higher inflation in New Zealand, even Germany printed 30.9% PPI number for the month of March, and this clearly reflects the effect of war in Ukraine. This is a 6th consecutive month of steep price increases. I've seen the higher numbers in Canada also. So yes, inflation numbers would be a very, very fearsome in coming days, fearsome also. In another key data, the US housing market at homes has dropped to their lowest level in nearly 2 years in March, and rising prices and mortgage rates, it will have an impact. It will have an impact on the consumer confidence also. Slowly, debate in intensifying about the Fed's ability to achieve a soft landing of the economy. It seems that it might be a hard landing. Asian currencies are generally muted today morning, except CNH, which has depreciated by more than 1% during this week to 6.45. So we have seen actually a risk assets buying, or risk assets were buying at that point of time. Risk aversion assets of buying CNH now, which is reversing back. In the rupee market, there was a third successive day of a large FPI outflow, and there's a good demand from oil. Oil companies kept the USD well bidded, but as the dollar index corrected, we have seen a 30 paisa move downward on a dollar rupee. It is unlikely to see rupee gaining much in the environment of these big macro negatives for the economy, but any further depreciation in DXY will see that rupee might gain. Technically, 76.20 and 75.90 supports are strong, while we see that the 76.50 plus, there are some persistent sellers are there. 10-year GSEC yield further dropped by 5 basis points yesterday to 710 in response to rumors of large corporates showing receiving interest in OIS market and soft USD index. That's all from me. Thank you.
Okay, so that's what we were talking about, a rise in MCLR. Now, this rise in MCLR, folks, would, as Pankaj mentioned, would be impacting the financial costing or the financing costing for all the corporates over the period of time, as generally all the banks have started rising MCLR. So let's see how the finance costing is being impacted with, and how much it is being impacted with this rise. On the other front, as Pankaj mentioned, the valuations for a lot of technology shares have started coming down, probably because of the real yields, as we mentioned, has now triggered some sort of, reassessment of the valuations or owning of these technology shares, which are yet to be extremely profitable. So there's this whole conundrum of the valuation that is going on with the increase in interest rates. We'll see how these valuations go ahead, but as of now the markets are enjoying some bit of a retreat, but the macro factor still continues to be on the risky side. So let's see how things goes ahead. Till then, we bid adieu. Also, just to bring you guys for another update, these are all a lot of fundamental updates. For a much clear and crisper activity recommendations, we'll be coming up with technical session tomorrow. So join us for the technical sessions where we'll be giving you a bit crisper price levels. That's it for today. Thank you.